Welcome friends. Today we will be discussing the concept of contingent liability. In any business, the businessman has some assets and some liabilities. Assets are the properties that are owned by the business, whereas liabilities are the amounts which the business owes to somebody else. These liabilities may be of different types. For example, if we buy goods on credit, raw material on credit, consumables on credit, we get a period of credit, and once the period of credit is over, we have to repay the amount. If I consume the electricity, I get one electricity bill and I have to pay for the bill. Same is true for the wages, salary, telephone bill and whatnot. So we owe some amount, we have to pay some amount after a period of time. We are sure that this amount is to be paid. There is no uncertainty regarding the occurrence of this liability, occurrence of this amount to be paid. Similarly, there is no uncertainty regarding the amount to be paid. So when these two things are certain, one, the amount has to be paid, and second, the amount is specific, then that liability is a perfect liability, existing liability. Whereas in some cases, we may foresee that there is a liability, there is going to be a liability, there is a future liability, there is a probability that a liability will occur. But the occurrence of that liability depends on happening or non-happening of a certain event. Then that liability is called as a contingent liability. Liability which is contingent, which is dependent on the occurrence of a particular event or non-occurrence of a particular event. So it is not a perfect liability, it is not an existing liability, it is not the present liability, but there is a likelihood that this liability may crop up in future. We are not sure whether it will crop up, we are not sure whether the amount of liability is also uncertain. This is contingent liability. Let us see some of the examples of that, where the occurrence is uncertain. For example, the GST department has not accepted my claim and they have issued me a notice that so and so amount of tax is due from me. I do not agree to the order, so I go for appeal. And the appeal is pending, the decision has not yet come. But I have in my hand the order of some authority saying that so much of amount is payable by me on account of GST. But I am fighting against it. I do not know whether the decision will be in my favor or in the favor of department. So liability may occur if the appeal goes against me and in favor of department. So this liability will occur on the happening of an event, that is happening of the order of the appeal against me. This is one type of contingent liability where the occurrence of the liability is uncertain. Second possibility, liability is going to occur, but the amount of that liability may be uncertain. Let us take one example for that. There is a worker working in the factory, and on the job he meets with an accident and loses his hand. I know that under Workmen's Compensation Act I have to pay the compensation to him. Now the worker is claiming, suppose 20 lakhs of rupees for the hand that he has lost in the accident on the job, and I am saying that I will pay you 10 lakhs of rupees. So I am ready to pay. I have accepted the liability to pay. Liability is certain, but the amount is uncertain. He is claiming 20 lakhs, I am ready to pay 10 lakhs. So this is another type of contingent liability, where liability is sure but amount is not sure. And sometimes both are uncertain. That is, happening is uncertain and amount is also uncertain. Let us take one example for that. Suppose I am a guarantor to my friend who has taken a loan from the bank. As on today, there is no liability because bank is not asking me to pay anything. And bank will not ask me to pay anything till the time my friend does not repay the loan. So my liability occurs when my friend fails to repay. So uncertainty is there regarding occurrence of the liability. Similarly, how much amount I will have to pay is also uncertain. Because if my friend pays a part of it, then naturally I will be required to pay only the balance. So both the things are uncertain. Happening, that is occurrence of the liability, is uncertain, and the amount of it is also uncertain. This is called as a contingent liability. As no transaction takes place on today, this is not entered in the books of accounts. However, this may have an impact on my financials if the liability occurs in future. Hence, it is necessary that this contingent liability should be made known to all stakeholders in my business. Maybe shareholders, maybe lenders, maybe workers, maybe suppliers. Everybody should know that there is a contingent liability on me of such and such amount. Hence, it is necessary that this contingent liability is shown as a footnote below the balance sheet. This will indicate to all stakeholders that in future this liability may occur. So, if I am sure about this, if I am conservative, then what can I do is I can make some provision for this contingent liability. This is for an individual or a company in private sector. For government also, contingent liabilities may be there. For example, government gives guarantee to the banks for some loans. Government gives guarantee to the banks for export finances and so on. Government gives guarantee for the amount of money to be repaid for the deposits which are given. So these are some of the examples where government gives guarantee. That can also be a contingent liability because it is simply a guarantee given by the government. My friends, a contingent liability, though not is the present liability, may occur in future and hence it must be shown in the balance sheet. This is the importance of contingent liability. I hope you must have understood and followed this. Today I'll stop here. Next time let us look at some different concepts in economics. Till then, bye.